Good morning, everybody. Today is Thursday, February 12th, and this is the pre-market analysis, QOL Trading. If you're new to the channel, hit that subscribe button, hit that bell over there so you can get future notification for other videos, and hit that thumbs up button to like this video. And then also down in the description, you can join our Discord community for live trading that happens from 8:30 a.m. to 10 a.m. Central Time every morning, where I trade Tesla options, where I go over a basic 5-minute opening range strategy along with some other advanced strategies. So let's get into some economic data right now. You had unemployment claims that just came out, 227,000, up a little bit. And let's see how the market should respond to that. It's nice that we're starting to get some data starting to funnel in right now. Hopefully we don't get shot down again tomorrow with the government shutdown. That would be a bummer. We need to get things back to balance here. So I don't see anything else on the docket for the rest of the day. You have existing home sales. That'll come in at 9 o'clock today. I don't anticipate that being too earth-shattering. For tomorrow, we've got core CPI. These are obviously numbers that are delayed a little bit, a couple of days because of the government shutdown we had last month. You've got month over month and then year over year. Also, Monday is a holiday, so we have bank holidays, so the markets will be closed on Monday. For all your swing traders, keep that in mind. So let's get into it right now. Again, subscribe to the channel, hit that bell so get future notifications, and hit that thumbs up button, like this video. So let's just start out with the ES like we always do. Let's clean this up a little bit for us. So real choppy. We're trading in this consolidation line here, channel here that I have. Trading between 7,000... call it 7,007 down, I would say 69.36. Tried pushing towards new highs yesterday. How high did we get? We got to 7,011 and a half. Thought we were going to push and make the all-time highs. Still had the resistance up there at the previous all-time highs set at back in October at 7,014. I said that we needed to get above that level, obviously, in order for us to push higher and get into the previous all-time high set at 7,043. I am not, these markets right now, it's just a big chop fest right now. I think that we have more downside to come. We could get a little run higher first, and then we get the downside. So one thing to keep in mind, I would say that as long as we are above the 20, the 50-day SMA, you're still okay to stay long. We are above this regressional trend line here that I drew. This is the lower end of it that I drew from August of 2025, sitting down here at, let's say, 69.32.37. So I would watch that level. I think if we lose that level, you're going to come back down and you're going to test this. I do have some lower levels down here at 68.99 and a half, but I think you come back down here and you test this 100-day SMA at 68.81 and 60, which is also a February 5th high. And then I think if you lose that, I think you're going to quickly move lower down into this 68.14 and a half, possibly 67.71 and a half. And then if we fan out a little bit, I think if you lose that level, let's get into a longer time chart here. Maybe need a 4-hour. I would say if you lose that 67.71 and a half level, I think you come back down to 66.39.25. I don't think there's not a lot of support down here below that level. If you do lose all of this, all of these gains that we had over the last couple of weeks, but right now we're in a consolidating pattern here. In between, I would say that you're going to have to get above this 7,000 level, 7,005.85 in order to move higher. And then on the downside here, I think today, if you lose the 69.64 level, I think we're probably going to move down here to the 20, and then beyond the 20-day SMA, which is sitting at 69.5236. 6940.18 is the 50-day SMA. I think we're going to test those levels as well. And then, like I said, if you lose those levels, I think we're coming down to 68.99.5 fairly quickly. Let's get over to the NASDAQ again. Subscribe to the channel if you're new, and hit that thumbs up button, like this video, and then hit that bell for future notifications. Almost looking like we're looking at the same chart here. Here's the NASDAQ, same thing, consolidation channel, sitting 25,423.83 on the high side and 25,157.27 on the low side. So tried to push, tried the same thing on the NASDAQ yesterday. I'm not sure what knocked it down yesterday. I didn't really follow the data too much. I think I was done trading fairly early yesterday, so I kind of turned off everything. But you know, a big push in the morning. I know Tesla had a really big push in the first part of the day, and then it hit some certain levels and then came off. But I would say right now, if you just look back at this whole entire week, we're just channeling out right now, so trying to find a direction. So I think the same thing on the downside. I think if we do get some downside today and we lose this 25,270.75, I think we're coming down to the lower end of this channel I have here, 25,152.25. If you lose that, I think we're going to come down to this October weekly low of 25,053. And then I think if we lose that, we're going to quickly move down to 24,960.75. And then if we lose that level, 24,887.75. And then if we lose that before that, then there's really not a lot of support until we get down to 24,680. So my thought on everything here, you know, the NASDAQ, we are below all these moving averages here. So I'm still not sold on the long yet. Funny thing is I use the word sold on the long. But I think that you may get a pop into these levels here, into the 20, and then you got the 50, and then maybe you get a little rejection. Here's the 100 also sitting up there, 25,521.75. And then the 50s at 25,537. That's 100, and then the 50 is sitting at 25,636.23. So you have some headwind up there if you do get a pop in the market a little bit. So I'd be careful on taking longs up into these levels up here, though. But not that being said, you could push through those levels, and if you do push through those levels, then I would look for those levels to become support, and then you could then push higher and get into these all-time highs that were set last year. And then you can get above these regressional trend lines here. So this one regressional trend line is a big level. It's sitting up here at 25,883.85. So that's going to be a big level to really make me feel confident that the market's going to continue to move higher. But I think that there's just a lot of different headwinds up here right now. It's, you know, a lot of talks of people just doing diversification with their portfolios, shifting out of tech, going into materials. And back into healthcare. So there's a lot of different things. There's some portfolio shifting going on right now. But anyways, that's about it for the broader markets. Let's get into Tesla. Again, if you're new to the channel, subscribe to the channel, like this video, and then go down to the description and join our Discord community for live trades from 8:30 a.m. to 10 a.m. where I trade Tesla options. Tesla. So I talk about this all the time. I have these point of control levels that are automatically drawn on my chart with my script that I have on here, and it shows where the heavy trades are, and it plots a yellow line, shows where the heavy volume is traded for that one particular day, and it adjusts itself. And so then what happens is, like for example, yesterday we had some heavy volume that was traded down here at 424.93 once the market got back down here. And so by the end of the day, it plotted this line right here. And so you can see this yellow line that comes across here. And so if the market doesn't come back and touch that level after the market closes or the next day of trading, I plot this level, and I use this level as it's going to be now, because we're above it. It's going to be a level of support. And I leave that level on my charts until it gets hit. So now we have a level down here for support of 424.93. So if the market pulls back there during the trading hour, I'm going to use this as a level of trade off of, okay? So now it's set there. I put my date on there, February 11, 2026. And so I'll leave that up there. So if you look from yesterday in pre-market, I was talking about if we do get a push, I had this point of control that was set from January 30th, and I didn't take it off my charts yet. And it was at 434.71. And sure enough, market popped up there, and it popped up there literally, I would say, in the first 5 minutes. We got up there pretty quickly yesterday. So this is the first 5 minute candle. So this first 5 minute candle, when I go and I'll show everybody the 5 minute opening range trade. Instead of taking a long on the first trade, I was watching, I was being patient, and I actually took a short up here when it hit this point of control level. I did take a little drawdown here because it did pop up. So I took a short here, and I did not exit it. So I took a short when it hit my point of control level. It was profitable, but I thought that this was going to be a real nice trade. So I stayed in it. I took some heat up here, and then it came out, and then it pulled back, and it failed for me nicely, and I made some decent money. And I could have made some real decent money, and if I held on to it, because the market fell off of this, just like a rock falling off a cliff, and it fell from 434, and it came all the way back down here to this 420 level. So that could have been a grand slam trade had I hung on to it. But it's not about one trade; it's about many trades. So now coming into today, different scenario here. So now I've plotted this point of control as 424.93 level. That's open here from yesterday. It doesn't necessarily mean it's going to get hit today, right? So, for example, we have some point of control levels that are still open, and they're lower down here. We have a point of control level that's open at 365.90, and that's from September of 2025. And below that, we have a point of control level that's open from September 4th at 333.78. So these levels could be open for quite some time. I had a level that was open last year for 8 months at 419, I believe it was. And the market had pulled all the way down to $200 range in Tesla. And then that point of control was still open at 415, and it ended up getting hit 9 months later on the upside. So I leave these levels open. So they seem to get hit, I would say, in the high 90 percentile. But the $1 million question is, when are they going to get hit, and when is your point of entry to know when to take that type of a trade? So as we get closer, like for example, yesterday, I had a sense that we had, at the beginning of the week, that we're getting closer. The market was rallying. It was trending up. We were making, if you go back and you look at the week, you could see we were making higher highs and we were making higher lows, right? So I knew that we're getting closer, that there was a good chance that was going to get filled yesterday. So that's why I spoke of it. So, and we are still trending up right now. So Tesla is still trending higher. But I will leave that. I still will leave this point of control level up there as a level of resistance. So I'll see how it responds for the next couple of days. But that's usually what happens when you have a point of control up there. It acts as a support or resistance level once it gets hit, or once it gets planted here. So like you're going to see here, I'll have this point of control level down here. So if the market does come back during the day, it is below the 20-day SMA. So that'll be make me a little wary on taking a long if it does pull back here. But you could take that long. It does coincide with a lot of different regressional trend lines that I drew here. I drew one at the beginning of the week here. This started actually last Thursday. So you could draw these regressional trend lines and go as far out as you want. You could see how they respond to you. But my bias on Tesla today is I'd like to see another pop today and see how the market responds up there, and then maybe see if we can get a little pullback, or if we can get a pullback on the open, maybe we can get this point of control filled, and then we can start pushing higher again. So as far as what I'm going to trade for today, so now we trade the last expiration date that we have for the week is tomorrow. So we're going to trade tomorrow's expiration date. And so I'm going to start off with the 430 calls. And you can see that they closed at $4.60 on the premium side. And then on the puts, I'm going to start with the 425 put, which closed at $3.90. So the market closed at, I would say the market closed at call it 428 area. So I would say that the premium on the put is going to open up a little lower because we're about $3 higher on the price that it closed yesterday. So that'll make this premium price a little lower, which is good because I actually like to see a little pop and fade in the morning. So it'll make it my cost to get into a put a little cheaper. And then on the call side, this 430 call that's going to expire tomorrow, because we're rising right now above yesterday's close, this premium will become a little more expensive. So maybe in the $5 range, it'll open up. So, but let's go look at the 5-minute opening range trade yesterday. So this is why you have to be real patient. You have to wait till it shows you the break. So the concept of this trade is when the range is set. So here is your range. So this green highlighted area is the first 5 minutes of the day. So the range yesterday was 427.96 to 435.84. So you had an $8 5-minute opening range. So then the concept is when the market sets your range, now your next step is, okay, when the market breaks the range on the upside, you take a long, and on the downside, you take a short. So it may not, sometimes it may not happen until, like, here, we didn't have a break of the range until 9:05, so 35 minutes after the market opened. And so yesterday, when the market opened and we skyrocketed up here, I was not getting interested in the longs because of that great push, and it was pushing into levels that I had up here, this point of control. So that's why I took a short up here, right? So now what happens is that was the first thing. So I had a different part of my trade that I was waiting for. So I took a short here at this point of control level. But now the second part of the trade is the 5-minute opening range. So now here's the opening range. So now we broke at 9:05. So now you could have taken your short right here at 9:05. So we broke the low at 9:05. So you broke 427.96. And it was a pretty strong break. The volume was pretty good. It was you had about 1.1 million shares that broke. And this yellow line right here tells you if the volume is below average or above average. So it was above average push right here, very solid. And you could see it was predominantly sells. So you could see it was orange. It was all sells, little buying, right? So to me, it told me there was good volume coming through here. So I took another sell here, and how I take a sell is I buy a put, right? If you think the market is going down, you buy a put. If I think the market is going up, I buy a call. And so from here, you broke that range, and then you could have gotten another, once you broke 27, you could have gotten all the way down here to the 420, you could have gotten $7 out of that premium. And how does that equate, and how does that monetize? So $7 out of a premium here, you're going to get anywhere from $3 to $4 out of this premium. So if you buy a one lot, that one lot is equivalent to $400. So that's a tremendous move. So, and yesterday it was much better. It was less choppy than Tuesday was. And what I mean by that is the candles, you didn't have big wicks on these candles. And so you could see these candles, sell, good solid sell, here, these kind of wicks you want to try to avoid, those type of wicks, that's choppiness. But for the most part, it was a good day versus Tuesday, where you had all this, going up wick, big wicks, all day long, just faking you out, right? So yesterday was a much better day, and hopefully today we'll get a pretty good day as well as far as the volume is concerned. So anyways, that is what I am doing today. I'm starting with the 430 calls. That could change as the day moves on, and I'm starting with the 425 puts, which expire tomorrow, which is Friday's expiration date. And again, if you're new to the channel, subscribe to the channel. Hit that bell there so you can get future notification. Hit that thumbs up button and like this video. And also, more importantly, go down in the description. Join our Discord community for live trading from 8:30 a.m. to 10 a.m. Central Time, where I go over the Tesla options trading. What you'll see here is this screen here. And so take advantage of that, because I'm only going to be doing that till the rest of the month, rest of February, for free. I do offer mentorship too on my website at www.QOLTrading.com, where I offer one-on-one tender loving care for anybody that needs it. Have a great trading day.